Good morning, folks, and welcome to Member Stock Chart Request. This is where we review the symbols that our members submit for me to review on video. Let's get to it. It is 5:30 a.m. Eastern Standard Time, and the futures markets are up slightly. We have the 10-year yield down a bit. So let's get to the charts. Before we do it, let's remember going into the next couple of trading days, we are seeing signs of churning in the market. That's stealth distribution by institutions. We have had 3 distribution days over the past 7. So let's just keep that in mind as we decide to open up new trades. It doesn't mean that we shouldn't open up new long trades. It means that we should just simply perhaps be a bit more conservative with the size of our new position and with identifying where we should place our stops. Sometimes we can get a little bit loose with doing that, but I think at a time like this, you really want to know where your exit strategy is. In short, folks, let's tighten things up. Okay, first chart up, IPCI, Intel Pharmaceutics International. All right, the first thing that's jumping out at me here is that we have a rising RSI, which is looking all good, right? The problem here is that we have Stokes, which are rolling over lower high and now down below 50. Like I always say about Stokes trading down below 50, rallies fade. So just be careful. Moving down to price. Here you can see we've had multiple days of attempted rallies and they have failed. So again, here's what you get when you see both lines on Stokes down below the 50 level. You see rallies fade. Now, looking at this, it's hard for me to be bearish. The reason is this, is that we broke out of a downtrend channel. Whether or not it'll hold yet, we're not quite sure. How do we know that we're out of this downtrend channel? When we close above 1.25, which is at current the pivot point, a very critical price point on this chart. So we broke out of this multi-month base, and we are now retesting the breakout point. In fact, let me rephrase that. We broke out here in early January, January the 2nd to be specific. We pulled back, retested, and then we have begun to rally. We rallied right up and into the 3rd standard deviation Bollinger Band. We are now pulling back. How would I play it? I would play it like this. This is a concern to me, the Stokes being down below 50, but you know what? You have a lot of overhead supply here. It could be skewing these Stokes by forcing the price down as people get made whole. So am I going to make excuses for the shares? No way. The shares need to prove their ability to move higher up and out of this base. So the test is this. We need to close above this upper band of resistance, even with the Stokes down below 50. If you want to buy the shares, scratch the itch, keep it small, then add more on strength, a close above 105, and most importantly, a close above the aforementioned 1.25. And we should have a fairly easy run up to 1.85, which is where you had a gap opened up, and then you're going to have a ton more resistance in here. So it looks interesting for a swing trade. I would first take a look at the short interest. Is there any short interest? A, B, if there is, how many days to cover? And do we have a setup here that would allow for a multi-day short squeeze? Weekly chart, this is not so pretty. I should have started off with this, but we could rally back. Let's update the chart. All right, so on price here, so far this week, we have an inside week. No new high, no new low. Now, how would I stop out of the trade? I wouldn't wait until we breach this lower band of support. I would stop out. I would make it really quick. If we break down to a new weekly low, and we appear poised to close down below this lower band here, I would stop out of the trade and let the shares prove to me that they can rally back. The beautiful part about shopping for stocks that are very oversold and in a downtrend and you're not currently long of them is that the probability of them rallying remains against you. So with that being a known, if you're not long, you have the benefit of being a bystander, being a value guy, and waiting for the most opportune time to enter the trade. I see no compelling reason whatsoever to go jumping into these shares right now. Now, I don't know what occurred back here that caused this washout. Maybe it was a one-hit deal. That's from more of a fundamental bit of analysis, and certainly not my area of expertise. With regards to the technicals, though, I would watch and wait for this one, and that trigger for me to get long would be a close above this upper band of support here at the 105 level. Yes, I would want to pay more for the probability of being right. Buying right here, right now, is a bit of a gamble. CORT Therapeutics, this is a weekly chart. This is no bueno. It's no good because we're trading up and into the third standard deviation Bollinger Band. And I know I say that sometimes and still continues higher. Folks, it just goes back to the discipline. I can't buy a stock that is trading above its third standard deviation Bollinger Band. I'll spare you the technical jargon. It's simply not supposed to be there relative to the 20-period moving average that it's being measured against. So why would I want to buy here when the probabilities are against me? And there's a strong possibility and a probability that we're going to pull back fairly soon. And that's what I would wait for. Wait for that pullback and a consolidation. And when I enter that position, I know that the probability of making money is vastly greater than where it was if I were to buy today. Volume has been good. So you're seeing institutional demand. Let's go to a daily chart. All right, so RSI daily chart 80.25. So we're coming off of overbought levels. And some of you that don't know my work, you may be saying 80.25 is pretty overbought, Bob. Well, relative to where the S&P 500 and the Dow Jones Industrial Average are on a weekly basis, this is nothing. 80.25. This is an absolute joke for a small cap. We can hook up higher. There's no doubt about it. But taking a look at this price action yesterday, we had an outside day, meaning we engulfed the prior day's move. That's pretty bearish. So in all probability, we're going to get a pullback here, and ideally a bull flag setup here, and then a breakout. I mean, this bull flag here, this consolidation, outstanding. Now, we're probably not going to get one with a length of this duration, but this is the consolidation that you'd like to see. Volume yesterday was light, which is good. So the chart is looking interesting. I have little doubt that in all probability, we're moving higher short term and longer term. But in the very short term anyway, we're probably going to consolidate here. It'll set up nice for good. Risk to reward entry point. I would buy the breakout. BZUN. I tell you, I have some smart members. I love this chart. I don't know what this company does, but really nice chart. So we're in a trading range, and we have been in one for several months now. We broke out and above this upper band of resistance the week of July the 10th. We've been bouncing around here, retesting what was resistance is now support. That's a great thing. But you could see that we began putting in lower highs, which ended here the week of January the 2nd. We broke out. We pulled back. I talk about this all the time. This is a very, very bullish setup when you break out, pull back, and retest, and you hold. I think that BZUN is a buy here. We'll rally up to $40.65. The test will be there. Do we break out or do we fall back down into a trading range? I would use a stop if I bought today right below this lower band of support here, and let's call it 32. Let's call it $33. Daily chart, outstanding. A bull flag formation. This is exactly what you want to see. And this is what I was talking about with CORT. This is the setup I want to see on a daily basis on this chart here. And you'll get it. It's only a matter of time. Now, the Stokes are lagging, but you expect that when you're in a consolidation like this. No big deal. RSI hooking up. Good stuff. Ultimate oscillator, bull flagging out. So you have your indicators which are validating the price action. No divergences whatsoever. Volume's a bit light, but again, you're in a consolidation. You'll see the tech guys, technical guys, buy the breakout. The momentum guys move in as well. But it has to close above this resistance level here. And once we start breaking out above 38.48 and then 40.65, you'll really see the momentum guys begin to move in. So I like this stock very much. Square, weekly chart. We broke out the week of January the 2nd. We pulled back, retested the breakout points, not once, but twice. We have a continuation breakout on our hands, so technically it's gone beyond our pivot point. And that pivot point being this high here at 43.08, where we broke out, put in a high, pulled back, and retested. And you can see on this weekly chart, we're pulling back off the highs of the week. Daily chart. Now, on a daily basis, we have broken out. So I just mentioned that we've gone beyond the breakout point. So if you're dead set on getting long of the shares, then we have to have a conversation with regard to risk management. Where do you stop out? So we closed above support here on January the 22nd, retested on the 23rd. Yesterday, again, we retested this support level. I would put my stop right below either A, yesterday's lows at 43.04, or if you want to keep it a little bit more loose, on a move below 42.76. A close below either one of those two levels would be a breakout point failure. And we might just very well see the lows of this trading range, especially if this market rolls over. So really adhere to that stop. But I think longer term, the probabilities of the shares moving higher, absent a market correction, is very good. And that's it, folks. If you have any questions, I will be in the members forum this evening, and we'll chat there. Be well.